is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, you and I have spoken a lot before about the token design for different projects and how, building a sustainable model, one that sort of works for users and for the long term is really important to building systems that remain resilient and functional. We've talked about SX, for example, as one example of that, your project, where, a portion of the fees that go towards operating the application are paid to burn tokens and to sort of maintain a stable sort of rate of inflation, but also go towards helping to grow the project overall. And this is this concept of tokenomics or token economics that is a sort of a frontier within Web3 that a lot of people are trying to figure out and pioneer. We've also seen some examples where tokenomics have gone very badly, where the designs have misaligned incentives between users and creators and developers, and in the end that's sort of spelled the doom for a lot of projects. So I'm not a token economics expert, but fortunately we have one on our call today who's going to help us to talk through it. Really the perfect guest for this. So Mehdi Farooq is a senior tokenomics analyst at Animoca Brands. Animoca is a group I think we've talked about before in the past, but not only one of the largest investors, into the Web3 gaming and open metaverse, but also one of the biggest builders and developers as well. And Yatsu, who is the founder of Animoca, is really one of the leading voices for an open metaverse and for Web3 and gaming. So Mehdi is also someone who I've joined his podcast, the Animoca podcast, recently. And we had a really great conversation. So he was asking me about my new book, Web3, but I'm going to turn it back on him and have him tell us a little bit about what he does. So Mehdi, welcome to the show.
Thank you, Alex, for having me.
Yeah, terrific. Okay, so what does a senior token economics or tokenomics analyst do exactly?
So TLDR, think of us as strategist or strategy consultant for Web3 protocols and projects. So those projects that want to transition or tokenize some aspect of the business, they can leverage us. So whether it could be the go-to-market strategy, airdrop strategy, tokenization strategy, or value accrual strategy, that's where we come in and help projects.
That's interesting. So specifically at Animoca, can you tell us about some of the projects that you've been involved with?
Yeah, there have been plenty. Like some I cannot even disclose because we are still kind of working along. But there have been projects like, for instance, recently Mochaverse. So with Mochaverse, we are launching our own NFT collection. And apart from that, we've also been involved with Sandbox. So with Sandbox, you have your Metaverse where the token could be used to kind of add rarity to different objects within the Metaverse. And there's also a staking element to it. And hopefully in the future, we'll also see some form of governance. So these are like some of the projects either myself or my team have been involved with. Again, we also consult a lot of external projects. So with these external projects, again, I cannot disclose them. But again, my aim is to make sure the economy is sustainable, there is value accrual, and all the stakeholders within the system or the ecosystem are kind of satisfied.
Yeah, interesting. I mean, I think about the metaverse gaming opportunity as we already spend billions of dollars every single year on virtual assets that we don't actually own, right? In the real sense, whether it's like Robux or skins in Fortnite and all these other different virtual goods. So one of the options or opportunities is creating digital bearer assets, right? Assets in game environments that people can own, and if they go up in value, they can participate in that upside. And conversely, if they go down in value, they suffer the consequences. But they have economic autonomy. They have real ownership over these assets. But then there's this whole other kind of concept, which you've alluded to, which is almost like an in-game currency or in-environment sort of asset that helps the users to do transactions, but also oversee some governance component. And that's the part like I'm a little less convinced on, frankly. Like I completely get the idea, like if you're going to spend billions of dollars on virtual goods, you might as well own them. Because ownership is part of the user experience in Web3, and that makes total sense to me. But the idea of like an in-game asset, like an in-game currency, can you like just maybe flesh that out a little bit in the context of maybe an Animoca portfolio company or an example?
Yeah, so I'll just speak in general. I think sometimes governance token are really important. So let's take example of DeFi first. So with a lot of DeFi protocols out there, these projects, when they operate a DAO, they're actually not trying to make money, but they're trying to manage risk. And that's where governance comes into play and it becomes really important. So for example, I'll mention the example of MakerDAO. So MakerDAO makes money by taking risk, the collateral risk, when they are trying to form a DAI, like, which is a stable coin. But then they're also taking a huge risk on the backstop of things. So what DAO does is help protocol manage risk. And if they're able to help protocol manage risk, what you have is a very beautiful economic flywheel. That token starts generating liquidity, and there is more confidence in that token because they're able to manage risk really well. And once they are able to manage risk really well, the market assigns them certain value and certain liquidity premium. And because of that, there's more demand side for that token, for the protocol to work smoothly. And as that economic flywheel starts spinning, they kind of start forming structural mode. So that was example from DeFi. Now, like I'll mention an example of ApeCoin. ApeCoin took a slightly different approach. They were like, okay, the DAO doesn't manage risk. In fact, the DAO help us in activities which helps us do a bottom-up approach towards IP creation. So you have your massive treasury, and that massive treasury is given out to community for different business initiatives that helps expand the Ape ecosystem. As the Ape ecosystem expands and token has more utility within the ecosystem, the token value increases exponentially. Now the DAO in this way has to decide whether the ROI of the treasury deployment is higher than what the status quo of the token is in the market cap. So those are like few examples of how DAO can actually help a protocol and also help create value accrual for the token. So there are two different examples, but they're two very important examples. If your DAO is managing risk really well in DeFi, your token becomes really important from a liquidity perspective. Or in, let's say, in case of Ape, if the DAO is managing the treasury really well and is taking participation in different initiatives, the token value accrual from utility standpoint also increases. So you have those two examples of why DAO and governance becomes really important.
Yeah, and I'm really happy you brought up the ApeCoin example because ApeCoin sort of recently announced that they were going to be launching their own chain, and it's sort of up in the air right now whether it's going to be a sort of application-specific chain. I've also seen Polygon come out and sort of propose them building it as a zk-L2. I guess I'm just kind of curious, what do you think about this idea of I guess going from a traditional gaming or content company to a tokenized gaming company, and then it almost seems like the final evolution is actually becoming your own chain. Is that something that you think is going to happen with a lot more projects? And I guess I'm just curious generally what your thoughts are on the sort of ApeCoin chain.
Again, I think that this is a very good question. To kind of frame this, what's beautiful about the whole Ape ecosystem is that it's an ecosystem. It's not just a one standalone product. So you have you can imagine having an NFT marketplace. You can imagine having tokenized version of an Ape movie one day. You can have multiple games out there. So once you are kind of speaking about that kind of vertical integration where you kind of have multiple products within the ecosystem, it kind of makes sense for you to even start capturing some of the economics of being a country. Now, if you compare this to a standalone project that just wants to operate in a niche, it doesn't make sense for them to start becoming a nation state. So when I mention nation state, I feel like once you have that ecosystem, you have that culture, and then you also have your own elements of politics and governance, it starts making sense for you to have your own virtual machine, which you can have more governance over, more control over in terms of economic incentivization, whether that's taking rewards, whether that's governance, whether that's airdrop and all of that stuff. So I feel like for those types of projects which have a bigger ecosystem and have a bigger community, I think for them it makes total sense to have a L2 that fits their purpose and they can have a more control over that. So I can imagine with Ape L2, they can start, like community can start launching NFT marketplaces that potentially make sure that royalties are paid. right now we are having all this debate where some protocol out there just do not have it on the smart contract to kind of pay back royalty. But within the L2, they can take control of that and governance of that ape ecosystem can decide what to do with that. So I think because of that reason, it makes sense. Now, I think more interesting question is whether there should be a separate token to kind of govern, like use it as a currency for the L2, or basically the ape token itself is used for running that L2 and is used for gas fees. I think that is something that the community has to decide, and I think it will be very interesting to kind of see play out.
Interesting.
Yeah, I agree. I think like one of the obviously if you have your own token, it's sort of a give or take, right? If you use ETH as like the native gas currency for your L2, then it's obviously easier to use, but you don't sort of capture the potential monetary premium or value of having your own native token sort of capture it. Sort of before I pass it off to Alex, one of the things we talk a lot about on this show is this idea of kind of like application chains versus multi-chain. So what I mean by that is when you build your own sort of application chain, you get to have complete control, complete flexibility on everything around your project, and you have sort of deeper value capture, but you lose out on the distribution benefits of being on multiple different chains. I'm just kind of curious, with what you're seeing, is there sort of a push towards more kind of like the ApeCoin side of building your own chains, or are more and more projects looking at, I guess, looking to kind of just do their tokenization on Ethereum? Or I'm seeing a lot of people sort of, Solana's gaining a lot of hype right now as well. I guess I'm just kind of curious what ecosystems are most exciting to you right now, and compare that to kind of what ApeCoin's doing with their building their own chain.
Yeah, again, very good question. I think both approaches make sense. There needs to be a good rationale. One thing which is one of my pet peeve in Web3 is people trying to launch their own L2 so they can get benefit from the valuation expansion of being L2 just for the sake of it. Because market, there's this thesis called fat protocol thesis, value accrues more towards the L1 and L2 side. And because of that, some of the participants in the market are able to capture bigger valuation. So I think if that's not your reason, I think you have to evaluate whether the project is big enough in terms of numbers, DAUs, in terms of use cases, that it requires a chain. I feel like if you're going for one use case, one particular use case, 90 to 95% of the time, you're better off just building on an L1 or maybe on an L2 itself. However, if you have multiple products and you have a very big ecosystem, then it might make sense to launch a L2 or maybe even an L3 on top of Ethereum and try to take benefit of that wider ecosystem. But again, as I said, 95% of the time, you do not need that. So for example, when I said the need for launching on blockchain, there's sometimes specific needs. Apart from ApeCoin, there's a chain out there called Osmosis on Cosmos. For them, the reason why they wanted to launch their own chain was because they wanted to change the consensus to make sure the transaction, there isn't MEF captured. So basically to make sure the transactions, the MEF bots do not manipulate the transaction. So because of that, they were able to use Cosmos SDK and change that within the consensus layer. And similar with like Thorchain. So when you have these examples, it kind of makes sense to kind of tweak the L1 on the consensus side, or maybe launch a L2 to do something different, or to capture that ecosystem. But 95% of the projects do not, in my opinion, need that. So for example, if you're a normal AMM DEX, or if you're an NFT marketplace, it doesn't make sense for you to like launch your own blockchain. However, if you're a perpetual exchange and you're going for, let's say, limit orders, or if you're going for something unique and you want to tweak the blockchain from first principle, then it might make sense for you to have your own L1, L2 according to your need. Apart from that, I kind of feel like in terms of my mental model, we'll live in a world where there'll be like 3 to 5 big L1s, L2s, like big ones that captures majority of the market share in terms of blockchain space. But there will be a huge tailwind of different blockchain existing, either on nation level, either on continental level, or maybe app specific level. But that doesn't mean that they might be able to capture majority of the market leadership in terms of block space.
That's very interesting. Andrew and I have talked a lot about that exact question, which is like, how many blockchains are there going to be, and what's the value accrual, and how does that all come together? One of the things that is a related theme is the question of interoperability. And I'm curious because when I joined you on your show, the Open Metaverse podcast, I was struck by the name, and the Open Metaverse Association, OMA3, is a group that actually was a partner for a couple of events on my book tour. And this question of open standards for virtual worlds and for metaverse environments, I think is a really interesting one, right? Because there's a concern that individual companies like, say, Facebook or Google or whatever are going to create closed loop environments that are similar to how they do business today, basically perpetuating a Web2 model into, the virtual world. But I like your CEO's way of describing the metaverse, which is not virtual reality per se, but a new shared reality. And I'm wondering, like, I don't want to get too far afield from the subject, but I think a lot of people are curious when it comes to the so-called metaverse. What is the role for token standards, tokenomics, in helping to connect these different environments together, right? Like, even within your portfolio, you've got Sandbox and all these other companies, all these other projects. What is the role for that in knitting these environments and applications together?
Yeah. So I think token standard plays a very important role. And there are multiple different things within our digital identity or digital world that can be tokenized, and the way they can be tokenized are different. So the premise of the argument is, let's say when you think of Twitter, they can deplatform you anytime. So recently, when they rebranded Twitter to X, somebody had the X handle, and they were basically, like, that handle was taken away, and they weren't fairly compensated. So the reason why blockchain exists is to give folks out there that digital property rights. But that digital property rights can live in different formats. So for example, you can have a soulbound token, which could be more applicable for something like education certificates, or could be applicable for achievements that do not need to have a monetary or financial incentive attached to that. However, there could be certain goods or virtual goods that need to have that element that it can be transferred. And for that reason, we have different standards of NFT, where NFT can be on a standalone basis, sold, bought, transferred, or there could be a standard where NFT can own other NFTs and be composed into a parent-child relationship. So for these digital property rights to have a very flexible medium of expression, we require different token standards. But then what happens is, these token standards, there will be one ecosystem that's far ahead than other ecosystems. And because of that one ecosystem will have these token standards, but that token standard cannot communicate with other blockchains out there. So the whole idea is, eventually in a multi-chain world, to have these token standard that allows communication and asset transfer from one ecosystem to another ecosystem in a very seamless way. And I feel like that's the struggle at the moment, because we are seeing amazing blockchains appear, like, let's say, Ethereum and even Solana for that matter. But the token standard in these two ecosystems are different, and the way the digital property rights are expressed are different. So now we're seeing a lot of protocols trying to work on consolidation of these standards. OMA3 is doing a wonderful job when it comes to virtual worlds. I know Layer 0 is also working on this cross-chain communication platform and are trying to, like, standardize the token format either for NFTs or fungible token or soulbound tokens across ecosystem. And I think eventually we'll see a world where we'll have some form of recognition of different ecosystem token standards being accepted across different blockchains.
Interesting. Yeah, I mean, we talk about this concept of composability, right? Of, like, different pieces of Web3 being able to click together. But then there's also this issue of different blockchains having different standards, right? And whether something's EVM compatible or not can be the difference between making it actually work, seamlessly. And I often, like, reflect on this. The idea of an open metaverse, to me, seems like a highly conceptual thing at this point, in that, there are so many use cases that would make it quite difficult to make it interoperable anyway. You know, I mean, this is the example of you're playing some sort of like immersive, experience with involving fighter jets or something, and then you take it to some medieval world of Warcraft, and it's like, one doesn't fit into the other. I don't know. Maybe that's a silly idea, but like the idea that we're going to have that sort of Ready Player One interactive integrated world seems far-fetched at this point, or at least that there are a lot of like challenges to getting to that point. Yeah, very interesting comments. Andrew, do you have any other things you want to mention for Mehdi?
Yeah, I guess I'm more curious on the NFT side. I mean, I think you guys were obviously kind of one of the I would say the sort of preeminent leader in the NFT space. Again, our podcast is DeFi Decoded, but we do sort of dabble a little bit in the NFT world, a little bit at least, but wouldn't say we're experts by any means.
That's but we talk we draft off of experts that we bring on the call. That's
exactly. So one thing that was interesting is I guess at the tail end of the sort of prior crypto bull market, DeFi started to underperform quite a bit, but NFTs really sort of took off. And now we're sort of seeing a little bit of a difference where, other sectors of the crypto space, whether that's kind of like on-chain speculation, I mean, L2s, there's so many different sectors now in crypto. They're starting to sort of heat up a little bit, and we're starting to see a little bit more interest, whether that's from investors or users. But the NFT space has sort of fizzled away a little bit. I would say both Alex and I are both sort of long-term bulls in a lot of what NFTs are doing, whether that's kind of tokenizing content, making things that previously couldn't be valued or transferred, making that possible. But I guess I'm curious your take on sort of just the NFT market as a whole. Do you think NFTs are sort of due for a comeback at some point, or do you think there's still, another kind of 1 or 2 years left of washing out of a lot of sort of the excesses in the previous NFT bull market?
I mean, both NFT and DeFi are, in my opinion, again, not financial advice, are due for a comeback. I'm seeing a lot of interesting innovation on both ends. So let's say when we talk about DeFi, restaking, I think it's a super interesting primitive, and I think a primitive that can eventually lead to blockchain-specific treasury yields, like long-term treasury yields. And I think we're seeing similar type of things play out in the NFT market, where you have on one side culture playing really important part, where you're seeing different forms of content and different types of digital things and collectibles being tokenized in NFT format. And on the other side of NFTs, we also have like financialization of NFT, where things like fractionalization, lending and borrowing, and perpetual trading of NFT, options of NFT being emerged. So I think both the sectors are kind of going through that cycle where there's like tremendous innovation going on day-to-day basis. Yeah. So when you say NFT making a comeback, I'm assuming you also meant like PFP. I think with PFP, it's based on attention, and in bear market, when macro isn't that good, the attention also becomes really scarce. But we are still seeing a lot of communities doing really well. So Mocha was one of the projects we at Animoca we are working on. The NFT project recently did 2x because the culture of that and the community is really strong, and it's now kind of getting correlated with what Animoca is doing. So Animoca made an announcement of Neon. The NFT itself proxied that, and it jumped and did 2x. So I think it's in bear market, it's also project specific, but we are seeing some signs of good projects emerging, like Memeland, for instance. For instance, their community is really strong. So their PFP project is like Captains and Potatoes are doing really well because their Metaverse is about to launch. So all of this stuff is really fascinating, and I think in bear market you do kind of filter out the strong communities with big communities.
Yeah, I think that's a great point.
Yeah, and what?
Oh, sorry, I just wanted to say that I think in the early outset, like the PFPs were novelties, and it was like, oh, which one's more rare than the next one? But the thing is, like, if there are parts of a bigger that alone was not sufficient to like maintain the value, because the thing needs to fit into a broader context, which is why I really like the discussion earlier about the ApeCoin ecosystem, and say what you will about the aesthetics of that community and the visuals themselves. There's something being built around that, and I think it's something similar could easily be true for all these other kinds of projects, which is that if the PFP is part of an identity system that gives you credentials or access to an environment, and that community is very strong and it is growing and becoming more useful over time, then those kinds of assets become your ticket in. And I think that that's a very interesting use case for the PFP, and I think it's one that is going to continue to grow. But I also agree with you that just because you launch a project doesn't mean that they're going to be successful. That's something that's kind of come and gone. And that's fine. I mean, Andrew and I have talked as well about the sort of weeding out effect that occurs during periods where interest in the sector wanes, where the strong survive. And what emerges from it are projects that have better designs, better functionality, stronger communities, as you say. And that's ultimately where we want to be.
Yeah, well said. I just one last thing I really want to touch on as well, because we were just talking about DeFi and NFTs. I'm curious about the intersection of those two together. So just like the idea of enabling, like, to me, NFTs are obviously much bigger than PFPs. They're kind of, I sort of think of them as almost like not securitized, but like tokenized content in a way, making sort of it's almost like creating a whole new asset class, things that previously weren't, able to be traded or transferred, making them sort of tokenized in such a way that we can create markets around them. And one thing that's really interesting to me is this intersection of DeFi and NFTs, where you can actually use your NFTs as collateral to lend against. You can trade even perps on NFTs. And what was really interesting is kind of over the last year, Blur came out and really hammered this kind of like financialization of NFTs. Whereas, OpenSea was more about, I guess, was structured more like an art exchange in a way, where like the pictures and were bigger focus, whereas Blur is a lot more about kind of the trading stats and things around that, making it more kind of like it was more for like traders, I guess. What do you think of this intersection of DeFi and NFTs in the sense of like enabling NFTs to be used as collateral, adding leverage into trading? I mean, I remember Decentraland at one point had mortgages you could get to buy plots of land in Decentraland, which I thought was really cool. You could even create theoretically like credit default swaps on those mortgages, all sorts of crazy stuff. So I guess what's your take on kind of this intersection of I guess people call it NFTFi. What's your sort of, I guess, view on that?
Absolutely.
Does it have staying power? Yeah.
So first, one high level comment on Blur. Like Blur, what we saw was the good use of tokenomics and economic incentives to basically kind of vampire attack OpenSea, which I thought was really interesting. Like they kind of did this meta game of that. Let's say if you're using Blur a lot, you get these access to airdrops. So just like high level comment, I think what they did over there was very, very smart, and one way of kind of using tokenomics to your benefit, which OpenSea unfortunately couldn't. So when we are operating in this perfect competition sense markets where your mode is very fragile, the tokenomics and the way you can incentivize different things becomes really important. And Blur was able to capture that in a very beautiful way. Just high level remark on that. I do think NFTFi is really, really interesting. I think we're at the early innings of that. So we'll see financialization of digital products, which we have already started seeing, as you mentioned, like mortgages of, let's say, Metaverse lands. But I think what's even more interesting is some of the RWA will come in the form of NFT. So we are seeing, let's say, US Treasury, for instance, and credit being tokenized from a fungible token standpoint. But if you go on the risk spectrum, there is this element of non-fungibility when it comes to things like fractionalized watches or one-of-one or limited edition collectibles or even real estate. And I think this is where NFT can play a very important role. And we have only seen emergence of public blockchains. Now, I think we're also going to later down, once people realize the power of Web3 and blockchain, we're also going to see consortiums as well as permissioned blockchains emerge on a nation level. And you can then see RWA in form of NFTs and the whole financial sector built on top of that. So I think from that perspective, that is one theme I'm very interested in. And we have also seen very, very novel use cases, like even in deep end, like I think me and Alex, we spoke about this earlier. So Helium did very interesting. The hotspot can be issued as a compressed NFT on Solana, and Hivemapper, if you're kind of driving around that in a map format, those location can also be kind of formatted as NFT. So I think the whole financialization of NFT, what it will end up doing is open up door both for digital as well as real world assets, and create extra utility and yield on top of these activities and assets, which I think is really, really important.
Yeah, I love that. And we actually had the CEO of Hivemapper on the show to discuss that, Ariel Seidman. So it's so interesting, this discussion with the intersection of, we started off talking about how to design, good token economic models. And then the conversation was, took us into some different directions, which I really enjoyed. Mehdi, this has been a really interesting discussion. We really appreciate your time. Where can people learn more about you and the work that you and Animoca are doing?
Absolutely. Your audience can follow me on Twitter, Mehdi Farooq 2 in numeric, and they can also follow Animoca on Twitter and YouTube. And I also host a Web3 podcast called the Open Metaverse Show.
Yeah, and check out the Open Metaverse Show. I was on it. It's an awesome discussion. Mehdi's a great host. Lots of great questions, fun chats. And they've had some terrific guests as well in the past. So Mehdi, thanks a lot. It was a great discussion. That's it for this week's DeFi Decoded. Stay safe, everyone. We'll see you next week.
Thank you. Thank you, Alex.
Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.